Marko Papic is joining us, Chief Strategist at BCA Research. Marko, good to have you with us here, back on the program here. Thank you for your time. Appreciate it. Just starting with something new, Trump and tariffs seem like, we hear something every day. But last night, the 20-year in the US went up above 5%, early in the New York trade. And you had significant volatility in UK markets, UK rates market as well. Gilts, etc. What's going on? It's not too far, back here to go to see that episode where, bond markets in UK, we saw a real big move. And there was a threat of it spreading to global markets. It did not. It was limited to UK, but it was pretty significant. Are we likely to see a repeat of some of that?
Yes, I think so. I think that there's more room to the upside on the 10-year yield. And I think the reason for that is not tariffs, it's fiscal policy. It's the fact that President Trump is coming in and proposing to expand the US budget deficit quite a bit, add quite a bit of tax relief, which would, of course, boost growth, but also would expand the deficit, expand the supply of treasuries. And I think that the bond market is effectively having I don't want to call it necessarily like a riot, but it's definitely not happy about it. Now, you could argue that the rise in yields reflects higher growth rates from the U.S. economy, so it's not necessarily pernicious. But I don't think that higher rates, which reflect higher borrowing rates, are going to be good for the economy. They may be reflecting a reality of the past 5 years, but the past 5 years has been underpinned by more fiscal support, and that support is going to dissipate. And so I do think that President Trump is going to ultimately have to succumb to the pressure from the bond market and temper some of his fiscal promises, specifically some of those promises outside of extending the 2017 tax cuts, such as removing taxes on tips or taxes on Social Security, some of the campaign promises that were associated over the past 6 months with his campaign.
Marko, hi, good to have you on the show this morning. On tariffs, I'm just wondering if they do come through, because yesterday we had that CNN news piece, right, that maybe Donald Trump could be using some sort of emergency powers to go ahead and impose whatever tariffs he wants to. When that news comes in, is it going to be a big knee-jerk for equity markets, or do you think markets have somewhere priced this in? Because look at December, the last 1 month or so, even the S&P 500 is flattened out. Markets are off the November euphoria. So what are we in for if some of these tariff announcements do start coming in, as he's been saying for the last many months?
Well, he's been saying a lot of different things. And we've also had different reports. Like on Monday of this week, you had a Washington Post report saying the tariffs would be limited. So dollar went down 1%. President Trump countered that report. And then today we had a report that he's going to use, basically announce a national emergency, and raise tariffs across the board. So he's also been saying different things during the campaign. On one hand, he's been saying tariff is the most beautiful word in the English language. On the other hand, he's been saying there will be no tariffs because companies will just move production to the US. My framework for tariffs is this. If tariffs are put into the reconciliation bill that will cut taxes, if they're used by US Congress as a legislative tool to raise revenue, you should worry about tariffs. Why? Because they're going to be permanent. And President Trump cannot remove them. If some country says, hey, okay, fine, we'll move some of our manufacturing to the US, can you please remove tariffs? He can't do it because they will be part of US law. So again, if tariffs are used in the legislative process to raise revenue, in this reconciliation bill, as we call it here in the US, that's going to be very serious. If tariffs are imposed through executive order by President Trump, it doesn't mean that they're not a tool of negotiations. I mean, he has to create a credible threat in order to bring countries to the negotiating table. So he will have to raise some tariffs. I think this is, there's no world in which no tariffs get imposed. But if they're imposed through executive order, they can also be removed. In other words, it's part of the negotiation process. And I would remind investors, I know it's a long time ago, but Nixon raised tariffs 10% across the board in 1971 during the Nixon shock. He wasn't just removing the country from the gold standard. And he did so in order to negotiate a currency deal, which ended up being the Smithsonian Agreement. Similarly, Ronald Reagan threatened across the board tariffs. Now, he didn't actually implement them, but he also negotiated a currency deal that saw the dollar depreciate under the Plaza Accord. So I think that President Trump is doing something very similar. He will be imposing tariffs with the intention of getting deals back from other countries. And so what I think is the likely outcome throughout 2025 is not so much equity moves. I wouldn't be focusing on that. I think eventually this year we will see the dollar peak. And that's something that, you were also mentioning on the program just earlier before I came on. The dollar has likely peaked at some point this year. There's probably one more leg up as these tariffs get implemented. And then as the negotiations begin and we start seeing other countries offer some concessions, I think you will see dollar peak and us reach probably DXY 110, 111, and then go back down.
All right. Hi, Marko. Good morning. Yeah, that's the point that I made. The hope out here from the Indian equity watchers is that the dollar index has peaked. So let's hope that does play out. But tell us, what's the approach to equities? You're sounding a little bit cautious for global equities on the whole. And as we chatted last time around, I think you said stick to the US, stick to Trump. The US market's likely to outperform. Do you hold on to that view? And what about India? We have had a decent run, but we've gone through a phase of consolidation for the last 6 to around 8 months. Your view on the Indian markets?
So yeah, first of all, I would say on the US, that's a very tactical view. I think that tactically speaking, there's just too many risks coming up, specifically with tariffs. I would also bring to that geopolitics. I think Trump is going to be very, very tough on Iran. We could have a pretty significant geopolitical risk in the Middle East over the next quarter as well. However, I do think the tariffs are tools of negotiation. And so by mid-year, you're going to start seeing two big stories play out. First of all, a peak in fiscal policy in the US. President Trump will not get what he wants in terms of fiscal outlays. So US growth expectations will actually have to come down, which may bring more Fed cuts back into the equation. Again, not right now, middle of the year. And then I think by middle of the year, maybe Q3, we will start realizing that the tariffs he implemented on January 20th through that IEEP are actually just a tool of negotiations. So I think that the dollar and US equity outperformance will probably end in Q2 or Q3. So stick with US for now, but I think come Q2, come Q3, we'll have a very interesting entry point for non-US assets, and that includes India. And I think that India is going to do quite well once we clear these hurdles over the next quarter or two. So again, what we need is a realization by the market that US fiscal policy has peaked. It's going to take some time, and that the risk on tariffs has peaked, which will take some time.
Right. Marko, just very quickly, we heard from President, you said Trump, incoming President Trump was saying a lot of things, and he did say a lot of things. Canada, Gulf of America, Greenland, the Panama Canal. I mean, are there any way all of this impacts markets or not at the moment? And what do you make of it?
I think there's a couple of ways to look at it. First of all, I think we should take it seriously. If you say something X, let's say you say something that's 10 times worse than anyone expected. It's probably not going to happen, but something 5 times worse might. In other words, once the narrative has expanded to like invading Greenland or Canada, that will likely not happen over the next 4 years. I mean, I can say that confidently, but something that was still unexpected might. So the narrative has clearly widened in what is appropriate. And so that's the first issue. And I think that one of the things that President Trump, might not care about or doesn't realize is that while when he says those things, they may not happen, other countries are listening. And he might be opening a Pandora's box where somewhere in some part of the world that's been peaceful for the past 20 years, some leader says, well, if President of the United States can say this, then I can act on it as well. There's a lot of irredentism out there. There's a lot of border disputes. And so I would say that that's how I would look at this as perhaps mattering in the long term. But I think in the short term, you should not expect this to move markets.
Well, Marko, I think markets will just hope that he says whatever, announces whatever, but at the end of the day, comes back home to see what's Wall Street doing. And if Wall Street starts faltering, then he very quickly tweaks whatever he's saying and whatever policies he's outlining to suit Wall Street. I think that's a big hope that I was reading that a lot of money managers have, that ultimately he'll do whatever it takes to keep the stock market happy. But we'll see. Prashant.
We should actually have. There are so many memes now. It's a serious issues. But I saw one. Marko, I don't know if you saw it. There was President Trump in Greenland. Obviously, a morphed picture, all snowy background, and it's a take on his book, The Art of the Deal. And he looks at the snow and he says, "Well, it's not even green. Knock the price down 20%." I mean,
my favorite. If we're talking about memes. And if we have time, my favorite, I don't know if you are fans of the board game Risk, but in Risk...
I've played it, but yes, go on, please.
Yeah, so in Risk, you get extra troops every turn if you control a continent. And basically, there was a gentleman, very smart gentleman on Twitter who said perhaps he's just trying to complete the continental combination by controlling, North America. But listen, I think one thing, if you want me to give you a silver lining here, if the president of the United States of America, no matter who it is talking about annexing Greenland, it's because there's nothing else bad going on in the world. so if you want a positive story, just put it that way. If we're talking about annexing Greenland, it's because none of the geopolitical issues that are out there are actually rising to an extremely high level. And I would just argue, let's not, wish for some other conversations.
Sure. Love the optimism, Marko. Hopefully that's what it's all about, that the rest of the world just goes on peacefully so we can kind of drum up some interesting conversation. But anyway, I'm sure we'll have many more chats as we get to the 20th of January and beyond. Thank you very much for being with us on the program today. Well, that's the global backdrop, and there's never a dull moment thanks to Mr. Donald Trump. But